very good morning. You're watching India Market Open. It's Thursday and it seems like we may finally, guys, hit 25,000 at the get-go at 9:15.
You know, Agam called it. Agam mentioned yesterday that kuch bhi ho jaye, it'll happen on the expiry day. Yeah. And we are likely to see it today. But yeah, pretty
Not because of expiry, but because of the Fed chief, it turns out.
Yes. So I've been thinking of ways of calling. This is definitely going to be a thrilling Thursday, one way or the other. Just so much news to unpack for you. From what the Fed chief has said, what's happening with Infosys, Tata Steel, and of course 25,000 is just around the corner. So let's go through this very, very quickly. Let's start with what has happened overnight. And really, I think Powell has delivered everything that the street was expecting. What was not expected was a rate hike, so that's definitely not happened. Look at how US markets have closed. And actually, the Dow is looking shy compared to the rest of the indices. The S&P 500, for example, has had its best day since February. The Nasdaq up 3%. Dow futures also in the positive. Meta numbers came in after market close and on a tear, a beat on all estimates. That stock was up 7% in post-close trade. So that's going to be one focus. And for tech, which has been sort of on the sidelines for the last few sessions, it's a comeback of sorts. And how? Now, obviously, Jerome Powell has said a lot of things, but I've picked up the 2 or 3 things that I thought were key and most important. Number one is where he says that September rate cut is on the table, provided inflation data is encouraging. The second line I thought was very crucial is where he says, I can imagine scenarios of 0 to several cuts this year. So he's kept the range wide enough for himself. There are concerns for the labor market, which he's talked about as well. And that becomes crucial in terms of how the data comes in. Another point that I would add, in fact, is him saying that a 50 basis point rate cut, he doesn't say it's ruled out, but he says it's not something we're considering right now. So a whole host of things. In fact, before we talk about the impact of everything he says, let's quickly just play out that one sound bite where he says a September rate cut is on the table.
On September, let me say this. We have made no decisions about future meetings, and that includes the September meeting. The broad sense of the committee is that the economy is moving closer to the point at which it will be appropriate to reduce our policy rate. In that, we will be data dependent, but not data point dependent. So it will not be a question of responding specifically to 1 or 2 data releases. The question will be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September. So you asked why not today, and I would just say, again, that the broad sense of the committee is that we're getting closer to the point at which it will be appropriate to reduce our policy rate, but that we're not quite at that point yet.
Not quite at that point yet. Well, all kinds of celebrations, though, have begun, because look at what happened with the bond deals overnight. And so bond yields did slide. You saw the US 10-year at 4.04 after Powell's comments. Just gold as well. Gold was up about 1% after these comments. And, already 100% rate surety of rate cut is penciled in. So Powell could have really dimmed those hopes, but that's not obviously happened. Crude is a different story because after the assassination of the Hamas chief, you've seen a bit of an uptick there on crude. Asia, I'll just quickly pull up before I, of course, get everyone in for their comments. Asia has opened strong with the exception of the Nikkei. And that's because of how Bank of Japan responded yesterday, has increased interest rates to the highest level since 2008. So Japanese markets are feeling the pressure. The implied open in India, though, is a whole different story. Like we've been saying, today is the day you're going to see the 25,000 hit, and it's likely once again to be without the help of foreign investors, because from the last couple of sessions you've been seeing foreign sells being cancelled out by the amount that DIs are buying, and that was the data we saw once again yesterday as well.
Yeah, and just before we get in our guest, I think the other interesting thing that Jerome Powell did was completely downplay the Q1 upsides that came in, saying that, that seasonality, not taking too much. I mean, the statement was as dovish as it can get, And it showed in the way yields, right? I mean, before the policy, the yields had fallen to 4.14. We're now at 4.05.
Yeah.
I mean,
4.04, in fact, is the last rate I saw.
So there's some serious downtick on the yields as well. And no surprise, I mean, that's a bit more ammo, more steroids for global markets if they needed one, of course. Japan needs one for sure. But the other markets, I'm sure nobody's complaining. So quite stunning out there. Quite stunning for some of the bond market portfolios. A lot of Indian investors invest there. And those portfolios would be in the green as well. So pretty cool what's happened, really.
It is, of course. There was some comments while they said that Fed chief has managed to thread the needle and the markets love what they're seeing. But I think he's also, and this is, of course, I'm quoting one of the big brokerages, and they've said that he could be setting investors up for disappointment later on if adjustments to monetary policy fail to stave off a more pronounced economic slowdown. So this is going to be interesting. You also have elections in the US. Well timed if the rate cut comes in September, which is what the markets are expecting. And markets clearly from December, actually, global equity markets have been cheering or hoping on a much anticipated rate cut. But if this does happen, rate cuts are always a huge positive for emerging markets. And while India looks expensive, it still is a chosen destination for a whole bunch of investors outside. Well, we have Seth Freeman at some point who will be joining us for a quick check on what he feels the Fed rate cut could mean for markets. From what we know, 97% of, and of course this is before the Fed chief, I'm assuming that be 100% Fed funds would be indicating a rate cut in September and a couple more in the next 1 year. But we'll, I think, come back to the global cues. Let's quickly finish up with what's happening locally. I guess to begin with, big positive for us this morning. We've cheated 25,000 in some ways over the last couple of days. But I think
25,000 is
cheated us. Okay, so we are on the receiving end. But bulls very much in control. The bread's not been too bad. We've held out. And we wake up to news that there's a rate cut. So 25,000 at 9:15, guys.
Rate cut?
Sorry, rate cut.
Yeah,
25,000.
you could argue.
Either ways.
Positive move towards
for the markets, I think the rate cut is already
here.
It's
already here. Yeah. So I mean, simple, right? Tech lift-off, save for what Infi does, but a tech lift-off by virtue of what Nasdaq has done out there. Most sectors yesterday, metals, financials, pharma ending in the green. That was a positive. There's clear strength in industrials, Q1 update. So that is positive. I mean, you spoiled for choices this morning, except for the valuations. Now, at some point of time, they'll come and bite you in the behind. But for now, I think things look okay.
Yeah.
So, yep, expect a host of reactions at 9:15.
But you know, Niraj, I don't know whether
Profit.
there'll be enough and more steam to carry it beyond 25,000 in trade today. I know it's expiry, so we'll have a pretty volatile session towards the last few hours of trade. While global cues are highly positive, what we did see yesterday is that you had the small cap giving way yesterday in trade. So while the breadth was okay, the Nifty did well, it was the small cap stocks that started seeing some selling pressure in the second half of the trading session. Earnings also, we are towards the fag end of the earnings season, so those stocks will continue to react to earnings. To add to Infosys, I like Tata Steel to that list. So there are a couple of heavyweights that may see some selling pressure this morning. Now, whether they change the direction of the markets over the course of the day is something that will be interesting to watch out for. But apart from that, it seems like crude could keep the oil and gas sector on tap as well. Metals have been in focus all through this week. Banking, now you want to watch out for banking stocks because this has also been a critical piece. We also have an exclusive story where IDBI is up for grabs and there are 5 big contenders. So banking will remain being a key sort of input in how the Nifty actually does beyond levels of 25,000. And if we sustain about those levels, that's going to be important to watch.
Yeah. Should we get to the trade setup and the stocks of the day before we get Seth Freeman in?
Yeah, no, I mean, I think we've done the trade setup amongst ourselves because this is what it is. Let's just do the stocks.
Yeah, let's start. I suppose Infosys is the big talking point.
Is the stock of the morning, not for good reason though. It seems like, of course, I'll quickly take you through what has happened to Infosys between market close yesterday and this morning. They've been hit by a 32,000 crore GST demand from the IGST, which is the Integrated Goods and Services Services Tax Department. Now, of course, the management of Infosys has already said that they don't seem that they are in the wrong and they've paid for everything that they had to. But just to highlight what the report is, and of course what the statement seems to stand in terms of Infosys. Infosys is being investigated by Karnataka's GST authorities for an alleged tax evasion of 32,000 crores in an integrated goods and services tax case. Infi is being investigated for GST evasion, so this is retrospective in nature from the period of 2017 to 2022. Under IGST Act, branches are considered as distinct establishments and services received as imports. This is what the IGST is saying. Infosys, on the other hand, has responded, highlighting that it believes as per regulations, GST is not applicable on the expenses incurred by the overseas branch offices of Infi. Now, what are the repercussions of this? What this means for Infosys, what it means for shareholders? But just to put perspective and tell you what that 32,000 crores even means for an Infosys, last quarter that was their top line. The top line was 39,000 crores and net profit stood at 7,000 crores. So this is a huge tax liability if it gets hit. Individuals have commented on this, and of course we'll have to find out how things play out on Infi. For now, it's an inquiry and there's a response, but it's a wait and watch is what it is. Apart from that, the other one to track this morning is going to be Tata Steel. On the face of it, those numbers actually look pretty solid, you'd imagine, right? But their revenues are down 7.9% to come in at 54,000 crores. EBITDA is up 29%. Margins have improved substantially, 12.2 on back of lower machine expenses versus 8.7, and net profit is up 75% and 919 crores, but this is much lower than what the street was expecting. Now, the reason net profit has missed estimates is because of an exceptional loss that is to the tune of 357 crores. This exception item is related to payments towards electoral funds in India. Well, apart from that, a couple of key factors to watch. European business, primarily Netherlands, is showing signs of recovery. India business struggled a little bit in this quarter, but they're expecting it to do okay in the next few quarters. The newly refurbished blast furnace is also working and now running well in Netherlands. UK operations remained in the red at 955 crores, and they've seen inventory built up to service downstream operations, impacting working capital. So while you're seeing profits up 75%, remember this is much below what the street was expecting. There's an exceptional loss too on that figure. And there was also an exclusive story that we carried where this could be a big penalty and could, of course, be a stock mover in that sense. And this is to do with what the government has been said. There are mineral taxes, and again, this is retrospective in nature, where the company, so Tata Steel has said that they've kept aside 17,000 crores as mineral tax dues that they may be liable to pay. So that is Tata Steel for you. It's going to be starting off in the red from what we expect this morning. But do we have set? Is there any clarity on that just yet? No.
Maybe set is there. Should we just
so
go
I'll
to
do
set
others,
Freeman?
do the smallest stocks. Let's finish the big ones and then
and then go to set Freeman, yes. So we'll urge set Freeman to just stay on for just a moment, set, while we just come to you. But Tamanna, the set of stocks that are the most important for you.
Yeah, so I would say Maruti. In fact, I'm going to cut my three down to one so that we can go to set earlier. I would say Maruti, the numbers came just at the end of market trade yesterday, and you saw the zoom up better than expected on all fronts, but I reckon you're going to see a further upside today for a variety of reasons. You have the brokerage notes out as well, so there is a one-off sort of boosting those frontline numbers to some extent, but brokerages are largely positive. Look at how Citi says they have retained a buy with a target price of 15,500. Strong margin expansion despite escalated discounts is the big takeaway. Pent-up demand translating into volume uptake after a soft Q1. Rural demand is witnessing stronger growth to urban demand. MK is the only one which is a little circumspect. They've maintained a reduce with a target price of 12,000 because they say that there's a normalization of a one-off in Q4, favorable forex and raw material costs which have led to the strong Q1. Small car recovery remains elusive for now. They're cautious on passenger vehicles because other metrics are weakening. Bernstein, on the other hand, is very, very bullish as well. They have a 14,400 target price on Maruti because they say the company is benefiting from SUV and CNG mix increase. Inventory levels are at 37 days. This one is important. much lower than 62 days for industry. Overall, a giant like Maruti moves and comes out with these kind of numbers, you are going to see that whole space really be impacted positively. Plus, remember, your sales estimates will be out today for the previous month. So, yeah, there are a lot more, but I wanted to pick Maruti first.
Yeah, and maybe we'll save the small caps for a bit later on. Just keep in mind from the large cap space, Coal India is the other one which has beaten estimates handsomely, and you might want to keep an eye out for that as well. But maybe good to actually talk about all of these in a bit. Seth Freeman is with us to talk about the impact of the Fed move on risk assets. And Seth, good evening to you. Thank you for taking the time out. And we've seen a bit of an impact yesterday itself, right, with the NASDAQ roaring back and 3% higher. The question is, with the commentary looking a lot more dovish than what maybe even the street might have anticipated, is there more in store by virtue of what the Fed has said and what the Fed will do whenever it does?
Well, it's pretty interesting because the chairman said they would be looking at reducing rates in September. And a number of headlines have already come out this evening that pretty much imply that the Fed will reduce interest rates. So, the market is a bundle of expectations. And but we did see, the markets respond very positively.
The question is that has Fed Chief Powell hedged himself enough, as he usually does in his commentary? He's saying that a September rate cut is on the table if inflation data continues to be. He says, I see from anywhere between 0 to several rate cuts. So all options are still open. He's left enough of wriggle room, you think, to not really have a rate cut in September if the need arises?
It's a lot of wiggle room, and I think it's well designed to not provide as much assurance as I mentioned the immediate headlines are indicating. But the interesting thing is the timing. There is a very strong negative sentiment about inflation, and high interest rates are, as I mentioned in a previous segment, really hitting businesses and also the real estate market. So it's important to get some reductions.
I think some people are commenting saying that the lack of dissent on the Fed's table is another underappreciated risk. I'd love to comment on that from you. And also, what does this mean for emerging markets like India? Usually a rate cut is a huge positive because it brings in flows. But let's not forget that we've had it good for the last few months on anticipation of those flows. So if this rate cut happens, does it add to any incremental inflows into India?
It certainly may allow investors to take a closer look at emerging markets and India. And we always have to remember, we've got different kinds of investors, and so many, at least individual investors and institutional investors are involved in index funds or index-based investing. And so it's as much a function of India's, percentage of an index as much as whether money movements are India focused per se.
Seth, just talking about what will be the continued impact now of a rate cut when it finally comes in September, if it does, because it's kind of priced in. So what really then becomes the next big trigger? Is it the elections now that you turn your attention to?
Well, there's a lot of attention on elections, as we talked about last week. Now we're getting some policy statements from the candidates. Once the Olympics are over, I think we're going to be looking a lot at politics. It is also summertime, and the market and at least non-professional investors take their eye off of their investments. So I think we're going to see much more activity in September.
More activity. Thank you, Seth. Great chatting with you. I wish we'd have had a longer conversation, but we leave that for later for now. But have a good evening and we'll see you soon. Well, that's Seth Freeman laying it out for us, talking about what this indication of rate cut of Mr. Fed Chair propping those markets means and what could this mean for markets like India going ahead as well. For now, it gives some cheer to D Street. Implied Nifty is indicating to a gap up and a very good chance or almost a given that we should be hitting 25,000 at 9:15 a.m. this morning. But there are lots of stocks, and I'm going to toss it back to both of you before I talk about the slightly smaller ones.
I just wanted to come in on Infosys and Tata Steel, both stories, Samina, just from the perspective of how both these developments, which will lead to the stock impact, have repercussions for more than just the individual stocks. In Infosys's case, if the GST department comes out and lays a precedent that if you have offices outside India and they are subject to the same kind of taxation, because that's what's at the nub of that fight, right? If you just pull up what Infosys has said in its response and in its clarification, Infosys' version is that my offshore offices would not be subject to this. Infosys has paid all GST dues, fully in compliance with the central and state regulations on this matter. And in their view, the company has responded subsequent to publication. Let's just go to the next page, where they actually give their viewpoint, where they make it very clear that in their view, this does not attract that kind of GST. But in the view of the GST department, any offshore entity does attract. So then, is that the same for all the other IT companies?
You know what's interesting is what Mohandas Pai made this comment yesterday, and he said this is tax terrorism at its worst. And he also urged the finance ministry to immediately intervene because tax terrorism could impact investments not just for your sector, Tamanna, it's also the country as large, right? If you want to become the manufacturing hub, if you're aiming and aspiring to be an investment destination, to have, foreign companies set shop in India, actions such as these do set you back.
Okay, but I mean, that hyperbole aside, because Mr. Pai, as a dear friend as he is given to a lot of, some hyperbole. My question would be what is the rule for other peers? Then have they paid those taxes and Infosys didn't, or is that notice coming to them? Just on Tata Steel as well. This is coming from a Supreme Court order, and yesterday you had a lot of mining stocks being impacted. So a GMDC and Odisha Mining Corporation, even a Vedanta, even a Coal India, everyone gets impacted because now a Tata Steel has set aside money for this. They've set aside 17,000 crore rupees. So I just wanted to point out that these two are going to have a bigger impact. And just speaking quickly about Coal India, because their numbers were out yesterday as well. The numbers actually are ahead of estimates as far as Coal India is concerned. So their EBITDA is up 5.62%, and the Q1 EBITDA, as per Citi, is 3% ahead of what estimates they had. Revenues have inched up slightly. EBITDA margins are up about 159 basis points, and net profit is up nearly 6%. E-auction realizations are at 2,440 per ton, which is down 4% Q on Q. And e-auction coal accounted for 12% of volume. So Citi has maintained a neutral and raised the target price to 540 rupees. So Coal India numbers have been good. Just on earning estimates, Prestige I will pick up because there's been so much focus. I mean, after Macrotech's numbers yesterday, focus on this sector is also very sharp. Revenue is up 11% for Prestige, EBITDA up 51.2%. Margins have also been very robust, gone up to 42.8% versus 31.3%. Net profits are down marginally at 3.4%. A good number, a good set of numbers from Prestige. I mean, we've been keen to speak to the management and understand how indexation hits them, because the broad assessment has been that if you remove indexation benefits, some markets in the south get hit more. Looking at how their prices have run up.
But Prestige's pre-sales numbers, I mean, even look at markets like Maharashtra and Mumbai, where they've got some significant properties. But very quickly, I'm going to add another company which was a standout is GE T&D, I mean, look at those numbers. Fantastic to say the least. Profits were up 135 crores. A quick breakdown of that. Revenues were up 34% to come to 958 crores. EBITDA was up a whopping 260% at 182 crores versus 52 crores that was seen in the same quarter last year. So 3x increase in EBITDA is what we've seen. Margins have gone up 12%. So they've reported margins of 19% versus 7% that was seen in the same quarter last year. And net profits are 135 versus 28 crores. Now, what worked for them is they've changed their inventories, which stood at 55 crores last year, have been brought down significantly to about 1.6 crores. And their finance cost has been reduced also from 11 odd crores to 2 crores. There's been some repayment of debt, which has worked for GET&D in terms of improving the margins and EBITDA performance. And the order backlog is up 59% at 6,280 crores versus 3,940. So it's looking hot and it's looking great. GET&D has had a good run in the last 1 month. It may not have done too much in the last quarter, but very, very strong set of earnings. And operationally, it's a standout.
Yeah, and some of these industrial-facing, power-facing pockets are doing very well. Just two stocks, JK Lakshmi, not by virtue of the fact that the quarter has been so good, and the quarter has actually been not good because operating margins, while they've expanded, are lower than what was estimated. But they have announced a restructuring, merging of 3 subsidiaries with themselves. And viewers, the swap ratio of Udaipur Cements with JK Lakshmi Cement is very positive for JK Lakshmi shareholders. So therefore, watch out for maybe potential reactions on the back of this particular piece of news. And we're speaking of real estate and what Godrej Properties did yesterday or Prestige has done. Puravankara is not to be left behind. Fabulous numbers. Revenues at 658 versus 323. The estimates were 414. Margins are flat, are maintained. But as a result of which, the profit after tax is at 14.8 versus a loss, and the estimate was 4 crores of profitability. So very strong numbers for Puravankara. So that's the other stock that may have a bit of a reaction in the session today.
Just since you're talking about real estate players in that pack, let's talk about Phoenix also very quickly. Phoenix Mills. Numbers are not bad. Margins squeezed slightly, but net profit up 8.2%, revenue 11.5%. This is not necessarily the best quarter for retail as well. Usually the last 3 months of the calendar year are the best for them, but they've not done half bad. EBITDA up 8% and margins, like I said, a little squeezed. Sundaram Fasteners is the other one. We'll just quickly review a beat on most estimates. Net profit up 11%. Revenue is also in the green. EBITDA has been decent from 226 crores to 247 crores. And margins have gone up by about 0.5%. So you have a fair set of good numbers there. But I think definitely auto is the flavor of the day. Maruti and M&M both came out with numbers yesterday. Mahindra during, of course, market hours. Maruti at the fag end of it. And, we spoke with Vineet Bolinshkar yesterday on the first cut of the numbers. Vineet, very good morning to you. You've had some time. We've had some time to look at all the details, listen to what the management is saying. So let's start with a refreshed assessment of Maruti. There is a one-off in Q4 which is also boosting those numbers a little bit, isn't it?
Yeah, but I would draw your attention more to the EBITDA than the one-off, which justifies the high net profit. So, if you see the Maruti volumes, small car versus big car or the SUV, 10 years back it was 17% in favor of SUV. Today it is 49 to 50%. So, you're clearly seeing a move from small cars to the SUVs. And what has happened is actually the small car volumes have started declining. This has led to a 4.4% increase in the selling price to 6.5 lakh. And that entirely is reflected in the EBITDA because the input costs have been pretty benign. And, if you see even from the largest selling car is obviously the Dzire, while it is growing at 47%, we still think that, that will slow down and the higher, entry-level SUVs, that is the Brezza and the Fronx, will take over from Dzire as the per capita GDP in the country goes up. So, we are clearly seeing improvement in the lifestyle of India, and that is playing out across all the vehicles. Further, what Maruti has said, that they are agnostic to the type of fuel, so they'll be launching hybrid, CNG, E20, as well as pure EVs going ahead, and we're going to see the launch of EVs coming this year. So also their strategy is to export. Make export also a very strong driver of growth going ahead into 2030. So, if you see, keeping all these things in mind, I think, that India is moving away from the small car mentality, moving up the value chain. And all the players in the Indian market have seen this trade-off happening in whether ASPs have gone up. So, even if the volume growth stays stagnant, in a mid-single digits, I believe that the ASP gains from a improved product mix is going to ensure that the double-digit growth continues, and that will lead to operating leverage in the EBITDA as well as the PAT. So we are expecting that FY27 we are expecting an EPS of about 680 rupees from 427 that it clocked in FY24. And we are upgrading our FY25 EPS from 450 to about 515. So there is significant 11 to 12% upgrade in this. And we think that the price of Maruti can scale up to 17,000 if you're willing to hold for a couple of 18 months more.
Vineet, isn't Maruti still not quite up there on the SUV game? And the fact that in the M&M commentary, it's visible that even SUVs are facing some bit of a demand issue. So where Maruti is not trying to become strong, even that segment currently has a demand issue. Why this optimism?
So, you have to look at the distribution strength that Maruti has. And, the entire portfolio of products that saddles the entire value chain. So, you have got models at every level of price point that the market wants, and Maruti is able to provide that. So we believe that Maruti, with its huge distribution network, reach, rural play, and with rural expected to perform better than the urban going ahead over the next couple of years, I think Maruti is best placed to benefit from that.
Vineet, if we were to look forward to Tata Motors, and we'll just look at the OEMs right now, what are you penciling in for a Tata Motors, and where does it sort of sit in your pecking order?
So, Maruti is obviously the top pick, as I spoke to you. Tata Motors has seen a huge value run play out, right? And there are a couple of things that are happening. So we need to split Tata Motors into your JLR, EV, and the CV game. So, we are expecting a slight softening in CV volumes. We expect EV growth to slow down, although Tata is talking of premiumization and, margins moving up. So overall, we think that the Tata would be at best a market performer compared to Maruti. And we think that, an upgrade of about 15 to 20% in the pricing of Tata Motors is on the anvil. In relation to Tata Motors, we prefer Ashok Leyland because, it's a pure play on the CV space, and they have chosen to, play the ASP game rather than the volume game. And with EV bus contribution coming up, defense growth coming in, and switch coming into play, I think it presents a focused play ahead of Tata Motors in terms of the pecking order.
We need very quickly, what do you make of this levy and the contingent liability that Tata Steel is keeping us? And I don't keep changing tracks, but you look at commodities closely. So I'm asking, how big a dampener this is for Tata Steel, and does it set a precedent of sorts for some of the other metal companies as well? Could the pack be under pressure?
I think that is going to be a cause for concern going ahead. Already, Tata Steel has been facing pressure from the US subsidiary not doing well. And with this coming in, it's going to dampen the flow going ahead. So that is going to be a damper, and that might have an acid effect on the other counters also. But I believe out here, one play that can buck the trend is going to be Vedanta, because the demerger, will allow them to raise capital and come out of their debt woes. And, they are obviously one of the lowest cost producers of the different metals. And focus place will be there where the value unlocking will significantly happen. So to my mind, if the commodity space is going to come under pressure, I think Vedanta might be able to buck the trend purely because of its expected better performance and turnaround.
Thanks so much, Vineet. Great to speak with you today on Maruti as well as Tata Steel. But so many big stories on NDTV Profit this morning, and I want to highlight an NDTV Profit exclusive, which is that the race for IDBI Bank is actually set to get hotter. Vishwanath Nair joins us now for more on this exclusive story. Vishy, first let's lay out the context and what the story is.
Okay, so the context here is that the government has been looking to sell this bank for a very long time, and they've really not managed to find any strong bidders, or the process is a problem, or the regulator is not convinced. Multitude of issues. This specific sale process started in 2022. So now, finally, in 2024, we are seeing 3 bidders being shortlisted, which includes Fairfax Financial, which is Prem Vatsa-owned Canadian financial conglomerate. There's Kotak Mahindra Bank, the local private bank, as well as Emirates NBD, which is the foreign bank in the equation. Now, these 3 bidders at this point in time have received the RBI's nod to go ahead and bid for bid for IDBI Bank. The government will open up the data room at some point in time in the next week or 2, and then the financial bids will be prepared by the end of this year. Maybe by March 2025, you'll have a fair idea of who's actually buying IDBI Bank. Let me make one thing very clear. This is not a very straightforward issue, right? Because of the 3 bidders which have come in, 2 have issues. You've got Fairfax, which has a problem with CSB Bank, the 40% stake that they own there, and then the eventual, if they do win IDBI Bank, then there has to be an eventual merger, and that's where the question is as to who takes the cut, right? Should the government dilute the value of a shareholding, or should Fairfax dilute the value of a shareholding? Depending on that, CSB will merge into IDBI, or IDBI will merge into CSB. Both these propositions don't look that promising. You've got Kotak Mahindra Bank, which has Reserve Bank of India restrictions that have been placed on the bank. It's got a new CEO on board. There's a lot of management bandwidth in question. So if they go ahead with the merger, then that becomes a big headache for the next 2 odd years, because it's a large bank. And the last massive merger they did was ING Vysya, which took 2 years to stabilize. IDBI Bank will probably take even longer than that, right? The third bidder in this situation, Emirates NBD, is probably, at least what I'm picking up from the people involved in this entire process, is probably the best place to take over. They've got 3 branch offices in India, no other presence. So IDBI Bank, with its 2,000 or 3 branches and 3,000 ATMs and a large balance sheet, will give them a big exposure into India. Plus the LIC angle, because IDBI Bank is the primary lender for LIC. So there's a lot of transaction banking revenue that comes in. So that makes it more interesting for an international bidder, even if the core business is still only stabilizing. Things look better that way.
So it's interesting for Emirates NDB. I'm trying to understand if it's interesting from an Indian regulatory perspective, because I know the fit and proper certificate has gone, but India and the Indian banking system has not been very friendly to foreign banks.
Yeah, only when it needs to, because if you remember with Lakshmivilas Bank, they allowed DBS to take over.
That was desperate. You wanted to get rid of it. Yeah. IDBI Bank, I know they've been trying to sell it for a while, but it's a good asset. And will they want an Emirates NDB or any of operational foreign banks to come in and have such a huge footprint in India?
It's evident from the fact that it took 1 year for them to give that approval, right? Fairfax and Kotak both already have their fit and proper. They're already active lenders in India. So the RBI is clear on both those bidders. So the one bidder, which is an outsider, which probably needs that special approval, is Emirates NBD. And that's why the whole process has taken this long. July of 2023.
The thumbs up is there. That's why Emirates NDB is in the fray.
The thumbs up from the regulator in terms of process, yes. But what the final bid is going to look like, the government has to agree whether that value that Emirates brings in is worth it. Emirates itself has to first look at the books and say, okay, does this make sense to me at all? Or should I probably wait? Because they're also in race for Yes Bank. So they've got options, they're playing around.
Not a bad space to be in then.
Yeah.
Great, Vishy. Thanks for this exclusive piece of news as well. And this detailing really helps. Time for a break though on that note. We've been non-stop 37 minutes on what should matter this trade today. We take a break, come back and continue a piece of this conversation, get in experts to talk about the day's trade.
Welcome back. This is India Market Open. Well, yesterday was a day of trade where we, in fact, did see marginal advances, but today perhaps we could see a further up move as far as the benchmarks are concerned. Let's take a look at how things have fared. Yesterday was the weekly options expiry for the Bank Nifty and also the monthly Bank Nifty futures expiry. In terms of how things have fanned out as far as the Nifty is concerned, where we're just 49 points shy of the 25,000 mark. We did see a lot of longs building in as far as futures go. In terms of the Bank Nifty too, marginal up move, but a relatively quiet weekly options expiry with unwinding of nearly 4% as far as your futures open interest is concerned. But as we move into today, remember that for the last 3 to 4 sessions, we've had a significant amount of writing around the 25,000 call. But yesterday was a day where that traction dissipated and it has now moved higher to around 25,200, 500 thereabout, which also means that at the moment traders are a little bit more accepting of the fact that the Nifty could potentially go about 25,000 and sustain above that mark. Also, another indicator factor here is that we're starting to see a lot more uniform writing around your 24,700, 800 and 900 puts as well. These are some of those factors that do indicate that we potentially could see the Nifty move above that crucial 25,000 mark, which has provided for so much resistance of late. Well, we've talked about stocks then, and there's been green across Granules, Godrej Properties, Chambal Fertilizers, Crompton Greaves, all of them looking at longs. Even among stocks which saw unwinding, we have short covering for Syngene International, Polycab, Atul, Deepak Nitrite, as well as Balkrishna Industries. All in all, it's been a good day of trade. And well, the expectation is that today as well could be another day for the bulls.
Day of trade, Agam, in that sense. Metals could be one that you want to track this morning. There'll be so much activity around the space. But the stock of the morning will be Infosys. IT major Infosys is being investigated by the Directorate General of GST Intelligence for alleged evasion of integrated goods and services tax amounting to 32,403 crores. Haripriya joins us with more on this. Haripriya, what is going on? I mean, this is a huge inquiry. 32,000 crores is not a small amount.
That's right. 32,000 crores is what probably Infosys makes in a year in profits. So it's a big amount, and it's under the scanner of Director General of GST Intelligence, and it has gotten a notice. So the tax authority says that Infosys is liable to pay IGST under the reverse charge mechanism for the services it receives from its overseas branches. The rationale here is that these overseas branches are seen as distinct establishments, and the services provided by them are considered as imports under the IGST Act. That's why they are liable to pay these taxes. And so far, Infosys has also been including expenses for its overseas branches in export invoices from India and using these values to calculate eligible refunds. This is what has been found out in the initial investigation so far, and the investigation will be continued as well as what the tax authority is saying. The company, however, has dismissed this, and the statement it issued, it's saying that they've received the notice and they've responded to the authorities, but the authorities saying that it comes under IGST is not something that the company is accepting, and it says that so far they've paid all the GST dues and are in full compliance.
Okay, so the question at the heart of it, thank you for that, Haripriya. The question at the heart of it is that if a company creates an overseas branch to service clients, does it attract IGST or not? That is the long and short of it. And in Infosys' case, since this has been going on since 2017, the bill has shot up to 32,000 crore rupees. Abhishek Rastogi, founder of Rastogi Chambers, is joining us for more light on that. Very good morning, Abhishek. Great to speak with you. Just first off the bat, if this gets accepted and Infosys has to pay this out, does this set precedent? Because there are a large number of companies which have overseas branches to service clients. That's the business model of the IT sector.
I think very pertinent question. It may set a precedence for sure. But the question today is that I don't see if there's a show cause notice and there would be a requirement to shell out that sort of a money. Infosys should stay here or would stay here at the appellate level. They would straight away go to the court to challenge this show cause notice on the ground that these are services to self. And what is important is to identify whether the export transaction and the import transactions should be treated as a mirror image. When it comes to export, the rule is very clear that the service provider and the service recipient must not be merely an establishment of a distinct person. Now, that is absent from the import of services definition, and that's a reason that this controversy has arisen.
Sheikh, how important or how significant will place of provision of services be in terms of relevance in this case?
No, I think that will be the key factor, because what happens is that these services, whether from a branch or from a separate entity, are rendered and received by the Indian service receiver in India. The question is whether the place of provision of these services will be outside of India or will be in India. So, for instance, there could be different set of services, because what we understand is that the notice or the communication also says that they are doing some sort of marketing for the services. Now, those could be intermediary services for which the place of provision will never be in India, because as per the rules, these are outside of India. And hence, on those transactions or those services, even if these are rendered by my overseas branch to me, which I will always argue on first principles are services to myself and hence should be out of the tax gamut, my second leg of argument will always be this, that these services, the place of provision of these services is outside of India, and hence these should not be taxable as import at all.
Abhishek, let's explain this very, very simply without a lot of the legal jargon. I know, tough for you to do, but let's try it. At the end of it, the question is that whether an overseas branch to service clients is a distinct entity which needs to be taxed separately or not. What has been happening so far? Because this is obviously something which has been going on for a while. And what has been happening with other companies which have overseas entities? Are they being treated as a distinct company or a distinct entity which needs to also pay tax?
So let me explain it in very simple words. When I operate through a separate legal entity outside of India or in several jurisdictions, these separate entities are liable to tax and to get the export benefits both. So if it's an export, I get the export benefit. And if these are imports, I get to pay the tax on the import of these services. The question is, when I'm operating outside of India, not as a separate entity, but as my branch, because I need to facilitate the rendition of these services outside of India. The question is whether this branch, which is nothing but part of my legal entity, can render any service to me. The answer, as far as the law is concerned, as far as the import of services definition is concerned, is silent on this aspect. While it is very clear in terms of the export, that export benefit will not be given when these are merely distinct establishments. But the answer is not very clear, or it is very ambiguous when it comes to import, because there is nothing which is mentioned with respect to establishment of a distinct person as far as imports is concerned. And hence, these companies have not been paying taxes. And I would say most of these IT companies have not been paying taxes because they have taken this view that these are the services rendered to myself. And the law is very clear,
Abhishek,
that for the tax to be applicable, the service has to be rendered from one person to another, which is not the case.
Got it. So, Abhishek, sorry, but because just in order to simplify this, is Infosys the only one which is liable for something like this, or do you reckon that this opens up the Pandora's box because others may not also, quote unquote, have paid? And any assessment there? Any insights you have there?
No, certainly it will open the Pandora box, because Infosys is just one of those companies which has taken this view. And I think industry-wide, the view is very, very clear that these are services to self and hence should not be subject to tax as far as the import is concerned. So I think it opens the Pandora box, and it will, the investigations will now go to a lot of ITES companies, and for that matter, for all of those other companies also which operate with branches outside of India.
Right. Abhishek, one last question. What happens next now? There is an inquiry and there is a response. What do you anticipate in terms of next steps that are going to be undertaken by both parties, and what is the sort of timeline we're looking at? Will this go into a bit of a long-drawn proceedings? Because let's not forget that the annual profitability of Infosys is about 25,000 crores, and this is 32,000 crores we're talking about.
So I think tax authorities would certainly want Infosys to pay some part of it. There will be some measures or requests, etc., by which the tax authorities would want some money to come. I think what Infosys would do and should do must challenge this notice straight to the jurisdictional high court and try to take a stay on this. Also, if Infosys challenges the definition of import of services so that it gets read down, so that it is very clearly provided by the court that once these services are between the branches, these are services to self, I think there would be no requirement of any pre-deposit, or, when you're going to appellate forum, you need to shell out money in terms of paying the pre-deposit. That can be saved if we can get a stay straight from the High Court on this transaction.
In that sense, has just started. Thank you so much for that insight, Abhishek Rastogi there. I want to get an idea of what kind of a stock impact we'll see this morning. So Sandeep Agarwal is joining us for this. He's fund manager and co-founder of Sovilo Investment Manager. Sandeep, very good morning to you. Straight, off the bat, the big question really is that how big a hit is this for Infosys, considering that the company has responded also fairly quickly, saying we've paid all our taxes and we'll take this legal process forward.
Hi, good morning, and thanks for having me on the show. I have been tracking the IT sector for now 22, 23 years, and I can tell you with reasonable confidence that, generally all of these large names like Infy, TCS, Wipro, they have been very, very compliant. Now, there could definitely be, an interpretation issue or something like that, because of which this kind of things can happen. And I believe, although I am neither a lawyer nor I have an understanding on the legal side, but I can say that investors trust Infosys and they believe that they will do the right thing, and whatever is required will be done. And Infosys is a company which will never shy away from paying the right dues if required. So I don't think there will be an impact on the stock. I don't see this as a reason to have a big impact. Obviously, 2-3% negative reaction from people could be there, but I don't see this as a ground for any kind of reaction on the stock. They have always been compliant.
If there is a because the earlier GST expert was saying that this opens the Pandora's box for similar verdicts on some of the other companies too. If by any chance this brings about a reaction, you in your assessment would you go out and invest into or take advantage of that dip?
So, we don't invest based on 3-4% reactions and all that. We have our ideas, but
Sandeep, the reason I asked this because I remember you earlier saying that you turned constructive on IT, right? So dips could be used to buy into, which is what I was asking.
Yeah, so we have our own financial models based on which we do buying and selling. So there are different parameters. But let me put it this way: if it opens up like the previous spokesperson spoke, and truly, then obviously, it will have an impact on the whole sector. So then the whole sector will have some earnings cut and all those things will happen. So it is not specific to then Infosys, because everyone is in similar business, everyone has branch office, and every kind of more or less the modus operandi for everyone is similar, because you have to execute business in a particular way. So I believe that, if there is a knee-jerk, very sharp reaction, then obviously it is a very good opportunity. The upgrade cycle and the earnings have started. So I think it is a good opportunity for people who have missed the stock earlier. They can obviously, use this as an opportunity to enter. So that is a view.
Right, you're right. It is a good opportunity, and if you are an investor looking to add to Infosys, like Sandeep indicated, this too shall pass, and it should have no stock impact. But for now, remember, it was trading lower on Wall Street. So if you look at the ADR on Infosys, the stock was closed about 2% lower. Even though it may not have a material impact on the company just yet, a gap down cannot be ruled out on back of the sentimental impact that this will have on the stock. Implied Nifty is expecting or indicating to start, that's GIFT Nifty for you, 25,100. So a very, very solid opening is what we're expecting. From the look of it, 9:15 should see 25,000 on the street. We'll take a break. We'll come back, put the focus on what stocks you should be trading, and of course how you should be building out your portfolio in the current environment. All that and more on the other side.
right, back with India Market Open right here on NDTV Profit, and we are looking at a tick of 25k maybe in the pre-open session itself. Remember, the implied open already suggests that. So in some sense, today is a historic day, the first time that the Indian market is not 25,000. And you know, there are landmarks and then there are landmarks. You've got to pay due credence to something which is like 25k. Shrikant Chauhan, Executive VP and Equity Research Head at Kotak Securities on the technicals. Nirav Asher, Head of Equity Research on the fundamentals with us. Gentlemen, thanks so much for joining in. Good day to have you. Shrikant, assuming that we nudge 25 or go above that, looking at what the global markets are doing and the mood is, you reckon there is more in store?
Good morning, Niraj. Good morning, everyone. Yeah, absolutely. I think the way the market is going up gradually and it is crossing all its important level, and crossing the level of 25,000 is certainly a big event for the market, because say like crossing 22, 23,000 is like always the market can celebrate, but crossing these psychological levels like 10,000, 15,000 or 25,000, it certainly adds a lot of value. But yes, I'm of the view that in the short term, if we see the overall trend of the market, then it is at its very extreme levels based on technicals. Based on averages also, we are far, far away from short-term averages. So close to 25,150, 25,100 levels, we are expecting some profit taking to come. I'm of the view that 25,200 and 24,500 should be the broader range for the market for next few days. And as we are opening very close to those levels, I think it is better to take some profit on long positions. But broadly, I am of the view that because there is hardly any major negative news flow in the market, especially for Indian markets, I think there is like stock specific activity going to continue for a longer time.
All right, let's look at the first rates ticking in, and what kind of a morning that we're really going to have is the question. Do we have the strength to move really toward 25,000? And more important question, even if we hit that mark, do we stay on there? I want to focus on Maruti for a few seconds. The numbers have been obviously good at close. You're already seeing a 5% uptick. Of course, that will settle. So that's just the very first cut. And Aster DM is the other one that is moving this morning. Vedanta is looking good. Coal India on the back of numbers is looking good. Of course, we'll wait for some of these rates to settle.
No Infosys.
Let's look at Infosys and what's happening with Infosys. Absolutely. Infosys and Tata Steel.
Oh, we should call Sandeep Agarwal right now.
Yeah, Sandeep Agarwal. Let's get him back. Let's wait for a minute at least after pre-open to see if this stays. But yeah, Infosys is...
So it's given up everything it has done post its earnings.
So it's gone from 9% down to 5%.
Now definitely given up earnings gain.
Yeah. So Infosys, Tata Steel, very quickly. Let's see what happened to Tata Steel. Tata Steel is doing okay. They came out and said we've kept 17,000 crore rupees aside for this Supreme Court judgment, which has upheld the payment of royalty with retrospective effect. But the numbers were decent, so 1.5%.
Nifty at 25,000 on pre-open trade. It's getting done.
But it's pre-open. It's pre-open. All right. So while we're getting excited here, Shrikant, let's come in with what would be your top picks this morning.
Yeah, I think this oil and gas energy space is like really doing well, and there we are seeing consistent buying interest. I'm to say the delivery based buying is consistently increasing, and most of the stocks are above their important support levels. And in fact, if you go through with their long term charts, then there was like hardly any major euphoric sort of rally that we saw in the past. So I'm of the view that stocks like ONGC, Tata Power should do well. Tata Power is like quoting above the levels of 450, which is something like positive, because it was like under some selling pressure close to these levels, but now it is sustaining above these levels. So from here, the stock can move to the levels of at least 475 or 490 in next 1 or 2 days of time. So it's a positional buy. But yes, it's a buy at current levels around 455, 456 with a stop loss close to 440. The other stock which we like is ONGC, and the reason is because it is into like all-time highs. It has crossed the level of 2015, which is something positive. And based on its technical formation, I'm expecting stock to move towards the levels of 360. We can keep stop loss somewhere close to 324 for the same. So both the stocks are above their important levels.
We also have Nirav Asher of Latin Manharlal joining us with his fundamental view on the markets. Niraj, how do you position your portfolio now? What are the themes to bet on? This is such a tough market to invest in.
Yeah, good morning and thank you for having me on your show. I think we've had some very good performances from certain sectoral players. Yesterday, I think auto sector, we've seen good performance from Maruti, M&M, and today we are expecting good numbers from Tata Motors as well. So I think auto sector continues to be the top pick. Apart from this, I think we also like the FMCG space. In the FMCG space also, we are expecting very good numbers from Dabur, Imami, and ITC later this day. And I think finally we have the power generation companies which have declared very good set of numbers. So we like particularly NTPC, Tata Power, and Adani Power in this space.
Okay. Well, there is a bit of a reaction that commodities might see, Nirav, because globally, aluminum, copper, etc. have all inched up higher. Are you a buyer into any of these names? Separately, are you a buyer on something that Srikanth highlighted, which is ONGC, because crude prices have shown a bit of an uptick?
Yes, it is slightly early to take a call over there, but I think definitely it looks bullish as far as the oil and gas scenario is concerned. And I think globally also, as far as the commodities are concerned, there is a concern that the prices will start inching up again. And I think most of the companies, manufacturing companies, have highlighted this issue also. So in a way, it's a positive for the metal companies.
And on the charts, let's talk about Infosys. Of course, I'll get a view from Nirav as well on it. But if you get a 2% gap down in opening trade on Infi, does it become a long trade or a short trade?
I think, see, like dipping 2% from highs is like very close to its important levels. But I am of the view that because the stock is under the event, we need to see that whether it is rebounding after hitting the lows, important support levels or not. And it is the best practice whenever we follow technicals. So I am of the view that in case if stock comes down to the levels of, let's say, 1800 or 1750, and if it starts reversing from there, then we should look for taking some positions. We cannot forget that it was around some 1300, 1350 levels. From there, all the way it reached to the levels of 1850. So in case if the correction extends, then the stock can correct to the levels of maybe 1700 also. So we can see some deeper correction also. But I'm of the view that broader pattern of the stock is like showing a lot of strength. There was hardly any indication that such type of news can come for the stock. So I'm of the view that it is like something which is unexpected event, and we need to see that whether it supports to important levels or not. But important supports are somewhere close to 1775, 1750 levels.
What about you? How significant is this development on Infosys with the GST slap of 32,000 crores? Now, is this going to have a material impact on the stock? Expecting a small gap down, nothing too dramatic just yet.
As far as we know, as far as the track record is concerned, Infosys has been a very compliant company. It's always been very compliant and very transparent as far as its operations are concerned. So this is one. And the second part is that probably there would be a lot of gray areas relating to taxation, which has led to this unfortunate incident. And I think this tax trouble issue, if the stock corrects more than 5%, then definitely it's a buying opportunity.
Okay. Another space which is looking interesting is autos. I'll just quickly come to you, Nirav, on autos. A couple of things happening today. You're seeing the auto sales numbers there on your screen as well. At least the first take of what I see for Bajaj Auto is better than our estimates of 3.46 lakh units for the month of July. Maruti, of course, in focus after the numbers that came just as markets were closing yesterday. So a view here on auto, Nirav, and what would you pick here?
Auto space is looking quite exciting. As far as Maruti is concerned, if we refer to the commentary which they are giving yesterday, more than the volumes, I think it's been the three important factors which work for their favor. In their favor is the cost reduction, the favorable exchange rate, and the favorable commodity costs. Now, all these input costs have been behaving themselves during the quarter. But if we were to see a rise in the input costs, then I think it could impact their margins. But that doesn't seem to be the scenario, at least in the near term. So I think Maruti is expected to do well. Plus, the two-wheeler space also is expected to do quite well. So I think Bajaj Auto, Hero MotoCorp are likely to perform well.
Okay, so
big thing.
Yeah, Nifty. So let's look at the closing rates of the end of the pre-open session for the Nifty. Let's pull that up. That's the big story this morning. You are going to open above 25,000 in just about a few minutes from now.
But you know, this is more fun when you actually do the grind and get to 25,000 in the day, right? As opposed to hitting it straight up.
But the week has been a grind.
That's true. It's not a day. It's taken a week to get to 25,000.
You're waiting with our party hats.
Get it ready.
For most of the week, because Nifty has settled above 25,000 in pre-open. Just a quick levels check from Srikanth.
Yeah, I think for Nifty specifically, 25,000 was acting as major resistance, and there was huge amount of call writing. But yesterday we saw some unwinding of that particular writing positions, and today we are going to see either 25,050 or 25,000 even 150 sort of levels, because I'm expecting some short covering should emerge after crossing and sustaining above the levels of 25,000. So close to 25,100, 150. There, we can see the Nifty, but we should look for taking some profit on long positions because we are at extreme levels. At the same time, 24,700, 24,500 going to act as major supports, and all these short-term averages are far, far away from current levels. So in case if there is any correction, then that correction will be little bit deeper. So I am of the view that we need to be careful if the markets are opening higher.
Okay, be careful. But guys, this is historic. November 2020 was the time when we nudged that 12,500 mark. So from there, it's been less than 4 years and we are knocking on 25,000. I mean, which is why, right? There are levels which, I know 25,000 is a level, but there are levels and 25,000 needs to be saluted. This is big. And just the fact that we are doing all of this at a point of time when India is, the fourth largest market by market capitalization in the world, or fifth largest one actually. By GDP, we are at knocking doors of 4. It's just quite spectacular that we are doing all of this at a point of time when the world is starved of growth. Never mind what the US markets and Japanese markets have done, but the world is starved of growth. But there are a select few markets which are doing well, and India is participating as one of those principal markets. It's quite stunning to see what's happening, and quite stunning to see that this is happening also when the Q1 numbers have largely been in line, as the reviews suggested yesterday, and auto numbers are revving up. Hopefully, we will end the earnings season also with a fairly decent number to support these valuations.
And we've been blessed with a good monsoon after quite some time. So I think even God is smiling on us, thinking we need to be rewarded, and that's reflective. So you're right, 25,000 is significant, and a lot of that, Niraj, has also come without too much support from outside investors.
Exactly.
This was a market that was so dependent on foreign inflows.
They've been selling.
Today we are independent of what people outside are doing, and it seems like, India's gone, it's been a long journey from being an export-driven economy to, of course, being a sector for cheap labor, a country where you'd go on cheap holidays, cheap healthcare. Today, of course, in a realm of its own, to say the least. But Srikanth, I think we should come to you on this one, because I know every analyst worth their salt over the last 6 weeks has maintained a sell on the index. Now, we've seen that all the way from 22,500, 23,000 to 25,000 today. How much longer is it going to take for you to change your opinion technically on the Nifty and Bank Nifty?
So if we go through with multiples of, let's say, indices, then we are close to the upper band of the multiples. We are at 20 times to the EPS of 2026, which is 1 year forward. So around these levels, yes, one should be definitely careful, because 20 times, most of the time in the past, we saw that some profit taking emerged because of some reason. But based on technicals, the rally is gradual. Whenever there is a correction, it is not more than 5%. Whenever there is a correction, it is finding support close to its important levels. And this time, the best part is that the liquidity is from the domestic market. So because of that, we are not seeing any major or panic reaction whenever there is like something adverse reaction. But to be very frank, I think in last, whenever like budget or election, most of the time we saw specific buying interest from domestic players as well as the buying emerge on immediate basis. So I am of the view that this rally is going to continue for a, let's say, little longer time. I'm not expecting market to correct heavily, but yes, it can spend some time if there is any correction. And yeah, I think this correction can come and can spend market some time. But broadly, I am of the view that 25,000 is the important level. If we see the market is start sustaining above these levels, then the next levels to watch out for would be around 26,500, which is like again close to 15-20% higher from 5 to 10% higher from current levels. For the Bank Nifty, there I'm bullish. I'm expecting Bank Nifty to move towards 53,500.
That's the key, right? We're going to be hitting 25,000 without participation from the Bank Nifty.
Yes.
When they come in, what happens then? Nirav, metals shining today. What would be your top bet? 40 seconds, please.
So metals and mining, I think we like Tata Steel and Coal India.
Tata Steel and Coal India. Okay. Gentlemen, thanks so much for this joining us today on such an important day of trade. We're really interested to see how we open up and what do we do from there. But we'll stick with the Nifty because that's the big piece. Guys, usually we don't do this, but I think we should get maybe Tamanna and Samina out here at the wall because 25,000 is historic. And this is obviously it's the first time for every level, but for 25,000 to come in the way it has is quite spectacular. Here come the first rates. Let's just get the Nifty rate up as soon as we can. And there should be wolf calls, cat calls, firecrackers, what have you. 25,024. We've nudged 25,000.
For your wolf call and cat call.
No, but this is stunning, Tamanna. This is just stunning as to what we've done. And by the way, banks are participating today. 0.5% up for the Nifty Bank in the session today. So that is the one which is revving up. It's not IT, which is quite interesting as well. Get the heat map up and let's see what is moving. IT is down, by the way. But Tamanna, it's the favorite. Maruti, which is up. And metals which are looking very, very promising because Hindalco, Coal India, JSW Steel, all of them in the green. So the metal index is shining, Maruti is shining, ONGC is shining. We are doing this without the support from HDFC Bank or Reliance Industries. We don't even see Adani Enterprises in the top 15.
Yeah. So the heavyweights have not yet come to the party, but the party has begun. And, I'm just recalling when we launched the channel, we were thinking of slogans like Ab Ki Baar 25,000, but then we decided to go with Ab Ki Baar 50,000.
Yes.
Because the 25 has not been that much of a struggle as expected. So question becomes, when is 50? Yeah, Maruti is definitely the shining star. A lot of the steel, metals space is what is shining today.
Most
Samina,
certainly.
Why don't you come in as well?
This is a historic moment and we should celebrate it, really.
Yeah.
History every month these days,
but
right?
25,000 is spectacular.
25,000 is exciting because, that really is the one that matters. Infosys actually not as bad as we would have expected initially. So it is, I think its compliance record is helping. I just want to see what's happening with the broader markets as well.
Yeah, sure.
Sabina
and Tamanna, over to you guys.
Thanks for that, Niraj. I guess what's going to be important is to sustain at these levels, right? I mean, we've started up with 25. And I think we're building on from what we look at it. But broader markets clearly outperforming the benchmarks. I think that's a good thing. Metals, auto, anything risk is getting played out well. And I think we're taking heart from the fact that it's a good breath at least this morning. And that's exciting. Metals trading with a gain of 1.5%. A quick check on auto if we can. Auto should be doing okay. 0.8% higher as well this morning. But lots of movers and shakers in the broader markets. Lots of earnings reactions largely.
Lots of movers and shakers, lots of earning reactions. Even the Nifty PSE index, if you pull up all the sectoral indices just right at the get-go, you have, of course, metals right at the start of it. but the Nifty PSE also doing fairly well. And among those sectoral indices, you have metals followed by auto PSEs, everything, all sectoral indices in the green, by the way. This is a completely tezi market. IT slightly in the red. Actually, not even an Infosys is not managing to spoil the party. But some specific stocks in the broader markets which we should talk about. Aster DM, let's pull up some good result impact. So let's pull up Aster DM, see what's happening with Aster DM on our AR. That's about 3% up because of the impact of results. Let's look at what's happening with some of those real estate stocks, Prestige, Phoenix Mills, Puravankara. All of them have had numbers coming out, and Puravankara was the one with the good numbers. Prestige and Phoenix Mills getting a bit of a thumbs down. Amara Raja is the other one that I just want to pull up because big deal with Ather, in the pact with Ather. So these are some of those. But I think even broadly speaking, Samina, we should look at what are the top gainers on the NSE 500 or the BSE 500
I think the
right
Nifty
now.
mid-cap as well, Tamanna, has hit a record high. So that's worth a mention. It's not just the frontline names that are doing exceptionally well this morning. Even the broader markets with their outperformance and earnings for the broader market universe, remember, have been largely a beat in terms of street expectations. So the broader market itself has hit a record high in the Nifty mid-cap this morning. But yeah, significant 25,000. IT slightly subdued, but that's largely Infosys. Wouldn't surprise me if it turns the other way anytime soon now, actually.
Yeah. So on the winning side, 361 RAM, remember, has been flying for some time since the numbers also came out. You have some of the smaller stocks, IFP, SIS, which have been doing fairly well. JSW Steel, remember, steel, Tata Steel, JSW Steel, that entire metals pack is in focus. KRBL has been flailing since the morning. I'm not sure if there's any story there. Sonata Software on the back of numbers, JK Lakshmi on the back of numbers. So CE Infosystems seeing a downtick a day or a couple of days after they've accused IPO-bound Ola of stealing their technology on Ola Maps. That's seeing a bit of a downtick today. I just want to see what some movers are doing. Let's see what is happening in the insurance space, Amina, because remember, all your insurance companies were yesterday up at close after that letter that Nitin Gadkari wrote to the finance minister. So let's see what they are doing. SBI Life, I'll just pull up an HDFC Life as well and see. That's seeing a bit of a downtick.
And I think it's taken us 23 sessions for the Nifty to move that 1,000-point move from levels of 24,000 to 25,000. This is the third fastest ever in terms of a swift 1,000K move on the index. So that is what is significant, and this comes in the midst of the earnings season. So I think that's the other factor you want to keep in mind, largely indicating that the street is seeming impressed. Let's pull up some of the earnings that we've seen. So you had Infosys, which has a tax notice, so the stock is slightly under pressure. Tata Steel reported numbers that on the face of it look good, but the fact remains there have been some exceptional losses coming in on Tata Steel, but the markets don't seem too disappointed. The stock trades a gain of 1%. GET&D is another one that posted earnings that weren't too bad. On the face of it, when you look deep down, great earnings, the stock is up 5%. Aster DM, 75% rise in profitability. Revenues were up 20%. Markets like it, give it a thumbs up, 2.5%. Godrej Properties, Puravankara were a couple of real estate names as well.
Yeah.
That saw reporting this morning. Godrej Properties up 1%. You also have Puravankara that reported 3.5%. Prestige as well while we're at it. So that's the other one that reported numbers, maybe not as well as the likes of a Macrotech, and the stock gets a thumbs down, 0.5%. So it's a mixed bag, but real estate this morning a little subdued, with the rest of the market up and about, Niraj.
Yes. Up and about and counting. Maruti's leading the way. Good day, big day. Let's get in our battery of guests to try and understand what do they do, the big voices, to try and understand what do they think about this. Nimesh Chandan, Chief Investment Officer at Bajaj Finserv, with us in the studio. Nimesh, great day to have you. 25,000 historic moment. How do you feel and what do we do from here?
It's a fantastic journey for India, and I think this rally will continue. So we are in a bull market. While the celebrations are going on, I must also add that even the best of bull markets have corrections, and if people are trading on leverage or doing F&O kind of trades more, they become vulnerable to even the smallest correction that comes. So if you want to participate in this great India story, you must think longer term and pick up companies, themes where growth is not completely priced in yet. So I would say this is a good time to review the portfolios. I think as our house view, we have that we move from mid-cap, small caps towards large caps, from themes that have already done well in the last 3 to 5 years to some boring and ignored stocks. And so take some contrarian calls now and start looking at, say, the consumer side and the domestic side more than the international and the capex side.
Okay. So mutual funds have been sitting on cash. The average AMC was sitting on 7% cash. And let's face it, I mean, this rally's proved all the naysayers wrong. Are you deploying that cash now if you were sitting on cash, Nimish? Because the market is just going one way.
So, frankly, we don't take cash calls.
You don't? Okay.
What we would, however, do is to move to areas where we still see a gap in terms of valuations, or after accounting for quality and growth in that sector, if we find some valuation gaps, we look at those. So it would be sector rotation and stock rotation rather than taking a cash call for us. We've not reached that kind of level, at least in the broad Nifty index, where a cash call is warranted.
Okay.
Nimesh, great to have you on the studio on an important day. And I think one question which a lot of investors, I think mutual fund investors, those in the cash market, etc., would be asking is it time to take some of those profits off the table? I think, if I'm not mistaken, I sensed a note of caution in your first answer as well, that even the strongest bull markets do see a correction. Are you anticipating one round the corner? Would you say this some time to take off the froth?
So most of the experts will say that the market's sentiment moves between greed and fear. And we are definitely towards greed. So we see patience going down. People are expecting returns that they've enjoyed in the last 2 years, similar returns to continue. I think some expectations on these returns need to be tempered because we've already seen a very good re-rating for the Indian markets, especially in some themes, which are narrow themes. When everybody tries to get into them, there are only 10 to 12 stocks available in that theme, they go to overvaluation very quickly.
Yeah.
And they may be good companies, but the bridge between a good company and a good investment is valuation. So if you already paid the company for next 5 years of growth, then not much compounding is left for you, even if that company does extremely well. So you need to wait for a positive surprise then. So I believe that at this point of time, while we celebrate that we've touched 25,000 in Nifty, but we need to be a little more cautious in terms of now looking at valuations. In any market, you cannot say that this is the top. The top always fools you. And you will see some correction coming, but you can't time that correction.
Yeah.
So you can't predict, and as Howard Marks says, then you can prepare, where you start slowly moving into areas which are little less risk and have not seen the kind of valuation stretch that some of the areas have.
Vikas Khemani also joins in, founder of Carnelian Asset Management and Advisors, on this very exciting morning. Vikas, very good morning to you, and I think truly a good morning for everyone who has anything to do with the markets. 25,000 crossed. What next? Time to take some money off the table, a little bit of caution, or you're saying that this is just the beginning? Can you hear me, Vikas? All right, I think we've lost that line. We'll try and get Vikas Khemani back and just get his view in as well. Nimesh, you spoke about now moving to areas which have not been stretched so far. I think briefly you mentioned consumption. Can we get into a little more detail of where these areas are? Because consumption-led stories saw a bit of a fillip after the budget and then lost their sheen.
Last 2 to 3 years, you've seen a subdued kind of performance from the consumer staples or some of the consumer discretionary. But there are green shoots or signals available that there is a pickup in growth in those areas. So naturally, the market would want to test a quarter or two to see how these companies perform. For long-term investors, this is the opportunity, right, where a sector or certain quality stocks have underperformed, but you're seeing some green shoots to pick them up. And it is better to position a little bit before the crowd comes in. So while the confirmation indicators will start coming in the next 2 quarters, the lead indicators are in place to say that we should look at consumption right now. And ultimately, job creation, the effort from the government in terms of spending, ultimately will lead to better consumption cycle.
Okay. Okay.
Right, we also have Vikas Khemani with us. Vikas, hi, good morning. Thanks for joining in on a pretty significant and fun morning. 25,000 on the index. Most people were calling it a top, maybe 2,000 points back. How do you feel at these levels? Do you feel like there's more room to go on the upside, or it's time to be a little more conservative and take money off the table?
Well, it depends on your time horizon. If you are a investor in India story for next 8-10 years, you just put and don't worry about these levels, because these levels beyond a point means nothing. It is just a number. But we've seen, every 1,000-point Nifty being celebrated for many years. So I think it's a good journey. And if your view is short term, I have no idea. But I believe that India is in one of the most transformation phase, and next 10 years is one of the best wealth creation cycle. There's a lot more money to be made from here, over the next 8-10 years. So the best for long-term investors to just stay put.
What are you buying, Vikas? I mean, it's a great market, you're right, and this comes in the midst of the earnings season. So largely seems like the street also is impressed with what earnings or what India Inc. is getting up to. What do you feel? Where is your biases? Where are you overexposed at this stage? What is it that you like? Anything that still looks very attractive to pick up?
I think, in every market there are good stories and ideas, and our India story does not change. We continue to remain bullish. Our investing philosophy does not change. Our bullishness on sectors like manufacturing, financials, consumption, services does not change. I think basically, India is one of the very few markets where there is so broad-based opportunity. You got to choose which are the management and companies you want to bet on. Widely, people will make money, but if you want to make slightly better money, you want to adjusted for the risk. And the key word is adjusted for the risk. Because in this market, risk is very easily forgotten, or risk is underplayed at this point in time. But that really comes in how do you factor that in. And so, like, at least we look at it that if I were to tell you one of our portfolios, earning growth over the next 2 years is 25%, ROE is about 18.5%, debt to equity is 0.1, and PEG ratio is around 1 times. So I think this kind of portfolio construction, when you have, at least it is adjusted for the risk. And I always tell people that in this market, don't chase returns, chase risks, or be careful of the risk. And of course, there will be, in every journey there are pockets of euphoria. And in this market also there are interesting plays available if your view is long-term. Easy pickings have gone, but, compounding story still remains in sectors I mentioned.
Vikas, hi. So, you talked about finding new pockets of space or investment over here. Just trying to understand if you're focusing more on the safer bets right now, the large caps, or are you feeling like this is a time to look at broader kind of stocks and sectors?
No, again, like I said, we really don't think in form of large caps and mid caps. We really think in terms of good business and run by good management team. I would, if I find a company or a business model run by good management, I would rather buy small than buying it big. So we think on those terms. And of course, some pockets of small and mid caps have become very, very stretched and risky, which must be avoided. And I think it doesn't take a lot of brain to figure out what those pockets and are. But we are able to find opportunity in pharmaceutical space, chemical space. Financials have become reasonably attractive at this point in time again. And consumption, there are interesting plays available to look at. So I think each segments there are pockets available. We are fully invested. We have been fully invested and we continue to remain. Our view has been always that, markets are in a good trajectory. Don't waste time for waiting for corrections. Many people have lost a lot of opportunity waiting for corrections over last 6 to 12 months. And, people who see India with skepticism will keep missing this. Of course, someday correction will come, the correction comes at 25,000, 28,000, 26,000, I don't think anybody knows. And the factors like Fed rate, softening stance on the Fed rate coming, I think it only gets better. The day, in my opinion, Fed starts cutting rate, we will have a deluge of flow towards India. It's already turning positive, and that will even further re-rate markets. So I think, if you look at all those things, I don't see deep corrections in the market. Short-term corrections can come unplanned and unexpected anytime.
Vikas Khemani, such good words. Thank you so much for taking the time out and speaking to us. Really appreciate your time today.
Pleasure, Nimesh, always chatting with you guys.
That's the view from Carnelian Asset Managers. And he made one point which is valid, Nimesh. From nearly 22,500 odd, everybody is talking about caution being warranted. There is possibility of a correction. We've had 2,500 points on the Nifty after that. Yeah. Who knows whether the correction will come at 25 or 26K. So therefore, is it, I know you mentioned you don't take cash calls. Is it prudent not to take cash calls? Even if you're defensive, maybe stay in defensive sectors if you will, but might not be a good idea to sit on cash waiting for the correction.
You are absolutely right. So if you are sure about the India long-term growth story, and I think that most of the people are confident about. Now, there have been statements that this is India's decade, corporates are doing very well, balance sheets are still not, in India, corporate balance sheets are not leveraged, bank credit growth is just picking up. So, think better times are ahead for India. However, when market discounts these things very early, you have to start getting a little cautious about where everything is getting, all the good news is discounted. Because life doesn't go in a linear fashion, it goes in a cycle. And that's why there could be corrections that come in. And this is a typical bull market, right? As I said, if it doesn't fool you, it's not the top. It will fool you. According to our internal calculations, how we look at Nifty is not by a price to earning or a price to book ratio. We look at the intrinsic value. And we are close to that value. So we've always been saying that on fundamentals, we just don't look at one ratio to value the Nifty. So around 25,000 is where our number is also. So market is at reasonable valuation as far as the large caps are concerned. So we see still some upside there. So we don't want to take a cash call there. Can there be a time where the whole market moves into a bubble kind of a zone? At that time, maybe cash calls become warranted.
Are we there yet? You think we're in a bubble?
Not in the large cap. So in, say, mid caps, we are about 2 standard deviations away above their markets, average. Yeah. And in small caps, we are 1 standard deviation slightly above that average also. But not in large caps. So if I were to just simplistically put it, when we are choosing companies, if it's a basket of 100 balls in, say, the basket is a small cap basket, 20 are green and 80 are red. Not that all of them are expensive, but if you pick one at random, it's likely to be expensive.
And have you in the recent, and I know I read this about you, where you don't actually rejig your portfolio very frequently. You buy and hold and you don't sell often.
Absolutely.
Have you bought anything recently? Are you looking to buy anything recently?
So in our mega trends portfolio, which we run on the strategy we run in our flexi cap, we look at projecting long-term trends of 3 to 5 years and look at companies that benefit from there. Now, obviously, there is also a discipline to buy them at the right price. So there are many sectors, because the market is a bit impatient, whichever sector people need to wait for 1 or 2 quarters, they are trading cheap. So we look at those areas.
So you've only got 2. What about chemical? Just a quick one on specialty chemical. It's one sector that...
we've been early buyers in chemicals. Okay. Earlier with Niraj, I've been talking on your show for a long time that chemicals is a trade to look at. And it has paid off well. Maybe not all the stocks, but some significant large ones have done very well. Pharmaceuticals is another area that we are very bullish about. Okay. Consumer staples is another area which I think will be low beta, but will be participating in the market. And banks, selectively banks and financial services.
Pharmaceuticals is also one theme which is coming up again and again. Thank you so much, Nimesh. Great to have you in our studios on a very interesting day and an exciting morning, as always. Mihir Vora joins in the conversation. He's CIO, Trust Mutual Fund. Mihir, 25,000 hit, 25,000 sustained. I think that's also as big a part of the story, that we're managing to sit above 25,000 quite comfortably. Now, this is a market which just 2 days ago we were talking about possible regulatory concerns, SEBI proposals, etc. Nothing seems to phase. What is the big risk factor right now in your view?
Hi, good morning. First of all, let's start with, happy news and congratulations to all of us, on hitting a good milestone. See, the risk factors, as you mentioned, remain mostly, I would say, a combination of global and local. The more immediate one, I would say, is the yen strengthening. The Bank of Japan hiked rates for the first time, and yen is typically been a borrowing currency, and the yen carry trade typically is a big chunk of the global investors' portfolio. So, with the yen strengthening a lot, it leads to some kind of unwinding of global positions. So that's one risk that I see in the immediate future. And the other risk factor, I would say, is sustenance of the growth momentum. So right now, the jury is still out on whether the K-shaped recovery is finally going to normalize and percolate down to the general economy, or whether we'll see an overall slowdown. So I think sustenance of the domestic growth momentum based on both government spending as well as rural recovery is also essential to keep the spirits up. Otherwise, I think overall backdrop globally is still fine. We are talking about the Fed cutting rates in September, etc. So the liquidity situation, etc., seems fine. Mutual funds are getting money. So apart from these couple of factors that I mentioned, the backdrop is quite okay.
Mihir, good morning, and yes, congratulations to all of us. The question is, for an AMC now, when you looking at what's next, and I know you think long term now, is this a good time to deploy money, or would you say that the common argument that we hear is that let's be cautious, maybe sit on a bit of cash because the markets are stretched, but the markets have been stretched now for nearly last 2,000-3,000 points.
Yes, so we continue to recommend, a SIP kind of an approach rather than trying to time the market because, as you rightly mentioned, neither you or I know the tops or bottoms.
That's true.
So regular kind of an investment strategy, which typically has been recommended, seems to be the most logical thing to do at this point in time.
Just one last question, Mihir. If you had to make those incremental allocations to the market, which you're recommending on SIPs, would it continue to go into the same pockets, or would you be looking at diversifying further any specific sector that still shows more value or opportunity than the other?
I'd say a broad-based fund, a diversified fund like, say, a multi or a flexi cap would continue to make more sense. Because, when you're talking about niche funds or sectoral funds or thematic funds, then the onus and the stress of entry and exit is with you as an investor. Whereas in a diversified fund, a more general fund, those decisions are taken by the fund managers. So in a market where there is some concern about, some pockets of overvaluation, etc., you don't want to play short-term momentum by putting in money or putting in large sums of money into thematic funds. A little bit here and there is fine, but the core investment should continue to be the broad-based funds.
Just one last question: is it? I mean, I know you don't do tactical calls, but you look at macro so well. Commodities, is that a good play now globally with the rate cycle possibly coming off? Commodities showing that spunk today. Could commodity-backed stocks do well?
Only very, very tactically, I would say. There is no big structural story, especially given that China is not doing that great, and that's the largest consumer of commodities. So I would say, if at all, it's a tactical play, not really a structural play. Probably a few weeks or months kind of a situation.
Thank you, Mihir. Good talking to you. It looks good. It looks great. And the going is amazing on day street. 25,000 on the index. When global cues falter, local cues jump in. And when local cues are muted, global cues come to India's support. For now, 25,056 and holding steady at these levels. I think most people on the street who have been circumspect for the last couple of months, I think that noise has gone down just a little bit. So now, while it's tough to call it a top, I think that's the argument, right? It's also tough to call it quits on this market. We'll take a break on that note. We'll come back, put the focus on M&M. It's been another fantastic quarter for them. We'll talk to the management about what lies ahead for the group. back and we're watching the India market open. The Nifty is at 25,000. It's taken us 24 trading days to get to this, the third fastest ever journey, 1,000-point journey on the index. The breadth is good. The broader markets look good. All in all, it's seeming like a good Thursday morning. But we have with us Amajit Barua, Group Chief Financial Officer at Mahindra Group, joining us to talk to us about what's working for M&M and, of course, what lies ahead in the rest of FY25. Thank you very much, Mr. Barua, for coming to the studios, joining us and helping us build perspective on the company. Largely, the consensus, your earnings, margins have beat estimates, SUV tractor market share is improving. Generally speaking, it's been a good quarter. As we look ahead into FY25, at a more macro level, how is business?
So, first of all, thank you for having me here. Macro level, at a group level, we are seeing strength in all of the three pockets of strategy that we have laid out. So, in the market leaders, both in auto and farm, you saw the results. We are happy with the way things are panning out. Services is starting to do better, which is really good because Mahindra Finance, as you know, was weighed down by some of the asset quality issues and all that. So profit there has grown 37%, which is great. TechM, very early days, but at least not at the low point that it was and starting to recover from there. And then the growth gems also did decently, 34% up in profits year over year. So overall starting to feel like the strategy is coming together well. In the three buckets, at the group level. And then very specifically on auto and farm, we can talk more.
Yeah, you want to start by telling us how that was looking? Auto seems good. At least that's what you said before we got into this conversation. Are you seeing an uptick and improvement in the rural demand and hence farm equipment?
So on the farm side, it is early days. We did see some green shoots. We laid it out in our earnings presentation. And we are hoping that results in optimistic outlook for the rest of the year. But it is early days. Monsoon distribution was one of the big reasons why second half was so weak last year. And we just have to keep watching that. The north and east are still seeing some stress. And so that's something that that will really determine whether we get more upbeat about the farm sector as we progress through the year.
Okay. But sorry, just wondering, is there an upside risk? So when you're saying that you're monitoring and the numbers that people are estimating 5%, 6% growth, is there an upside risk to tractor volume growth if monsoon distribution indeed improves?
So when you talk about the 5 to 6% we feel pretty good about, right? That's what we have. I think the question is more, can that 5 to 6% become more? That's what we are. A little bit, it's premature is the way we look at it.
But if monsoon improves, that could happen, you're saying?
It is a big driver of rural demand for sure. And distribution, if it is good, then it should help. There is an impact of an additional festival this year, which does help the overall industry. And being market leaders, we benefit from that. Share gain is helping. The success of Naya Swaraj has been that whole strategy has worked out really well. Seeing the strength in Punjab, for example, and that's something that does make us optimistic if the headwind of distribution doesn't come in.
Mr. Barua, just specifically on tractors, and I know you spoke about farm equipment overall. How confident are you of seeing that buoyancy increase? Are you beginning to see green shoots? Are you beginning to see a turnaround from a space which has relatively been a bit problematic?
So if you look at just last quarter of F24 to first quarter of F25, that is a good sign, right? I mean, if there was continued stress of the level that we saw last year, then you would not have seen that turn even in the first quarter. It doesn't change just because of the quarter, right? Of course, an additional festival and all that helps, but so that's what is making us feel like there is a green shoot here. And it should pan out. We talked about the lack of seeing that buoyancy on the LCV side, which is something that you typically see when rural demand picks up, right? So that's why it's a little bit, wait and watch. Let's also see that come up because then that will give us a lot of confidence that the farm sector is starting to look good.
Yeah. Just on the passenger side, for the industry as a whole, and I just want to broad base and see where you see what's happening with M&M. Quarter one has overall been a little sluggish. There are some concerns in volume growth, but that's not what you have faced. I think that's one big uptick, that volume growth has been good for M&M. What is the strategy that's working?
So I think there are two factors here. One is our vehicles have been very well received by the market, and we've always said that the overall market doesn't define how a vehicle is going to necessarily perform, right? So the overall market has a lot of dynamics, but if a vehicle does well, it does bring in strength to the results. So 3XO's launch and the success we have seen with that should help us throughout the rest of the year. We are optimistic of what the Thar 5-door can do. And then we do have a base effect where our supply chain constraints did limit us to around 35,000 average last year vehicles. And if we can do 40,000 plus this year, then you automatically get a double-digit increase because of that, right? So it's a function of if you can maintain what we have been doing over the last 6 months and you have strength coming in from 3XO and the Thar 5-door, you will see why we feel good about the high teens.
The 3XO discounts, etc., have worked, haven't pinched you too much, and now are you going to scale back on them? Any directional plan there?
Even on the 700, right? The discounts.
So 3XO was priced very well, we believe. It was priced to win in that segment. It's a very competitive segment. But I don't think price is the only factor. And I think this price could have probably got the first 10,000 units, but it would not explain the strength it has seen since. So the whole package has been very well received. And our strategy typically is, as we go progress and we get the volume advantage in particular brands, then we do look for where can we have new variants created which will give us some ASP pickup, etc., etc. On 700, we were very specific in February that we believe that because of our supply constraint, too much of focus has been on the high-end variants. Now that supply is easing out, we want to make sure that the vehicle becomes accessible to a much broader mass of that segment. And that's why we were planning to introduce some price cuts and variants. So we introduced the X5, which came in exactly like we said, and the price cuts were too. For whatever reason, they were seen as a surprise when they were not. We laid it out in February itself, our strategy. But as we explained, the reason we did it was we had seen the costs go down significantly on the X7s. And that is what we are passing on to the end consumer.
Can costs come back? I mean, there is a Fed rate cut in the offing. Commodity prices this morning have gone up. But if indeed the cuts happen, if China rebounds and if base metals move up, could that add pressure to margins? Because you've done very well on margins, both on PV and tractors this quarter. Can that continue or could we see pressure?
It's possible. So
if that happens, would you reverse the price cuts?
Yeah, we've always said, the pricing, what we have done in the past is passed on the commodity price increase that we saw through the last couple of years to customers. And as we've seen the benefit, we've also passed it back. So I think that is a challenge that the industry does face. You can't keep absorbing all that cost increase. Having said that, what I'll just try to break that down a little bit. There are really three pockets within the cost, right? You've got the commodities, you've got the electronics, and then there's everything else. So it will have to be significant increase in all three buckets for us to feel that we need to pass on. And unfortunately, that did happen in the last couple of years, right?
Right. So just one last piece here, just to round this off. If indeed, let's say, costs go up, right, and if you have to reverse some of the price cuts, is demand looking strong on the PV side? Because like I said, while we were having this conversation, almost every analyst who attended your con call yesterday is saying that tractor upcycle ahead, PV volumes are moderating. Do you have the demand buoyancy to be able to hike prices and still keep your sales not impacted?
At this moment, we don't believe we have a challenge with the demand side. We saw significant improvement in 700 volume after the price cuts were announced. So as we mentioned, we just felt we had become too unreachable for a large part of the segment, and we needed to make sure the vehicle was reachable. And that strategy seems to have played out well. Let's see as we go through August, September, whether that is playing out as we expected.
I just want to get a sense from you, Mr. Barua, how you feel about the whole hybrid play. I know the conversation has always been that EV, your born-again vehicle, etc. Just looking at how, policy-wise also, there could be a push for hybrid. Hybrid has done well for your peers. It's something that the Indian buyer is warming up to. Is that something that you would ever consider, or you're purely in the EV, EV camp?
Let me clarify. What we have said is we believe that focus is important. Okay, and that strategy has played out well for us in the SUV segment. We've stayed true to our SUV image, and I think that's worked out really well. Same thing with EVs. That's where we've put our focus. We put a lot of engineering effort, and we want to make sure it plays out the way we have envisaged. Now, that doesn't mean we completely close our eyes to new demand segments that might get created. Today, we haven't seen something compelling in hybrid, which is going to be a sustained demand. Yes, you'll have some ups and downs with price cuts, incentives, etc., but you need to have a significant segment creation for us to feel really enthused. And I think what we have said is, at least from an engineering capability, we can pivot there very quickly. It won't be in 3 months, but we can definitely significantly reduce the cycle time it takes to introduce a product into that space. So we have the engineering capability, and if the right demand pattern emerges, we will.
So if you aren't seeing anything compelling for hybrids, what is everyone else seeing? Because you have a lot of people in the space launching more and more. I'm just wondering, what are they seeing that you're not, or what are you seeing that they are not?
Absolutely. So I think the hybrids, especially in sedans and all that, seems to be really something that has been has been a big focus. Also, smaller, compact have done well to a certain extent in some of the segments we are, but those segments we haven't seen as much of a play as it would make it compelling to switch over in a big way. So I think that's where I would just differentiate. I'm not at all discounting what might be happening in certain segments. We haven't seen it yet play out in our segment.
But if you need to, you could.
Yes, that's the way I would put it.
All right. Thank you so much, Mr. Barua. Great to have you here in the studio.